Hello, everybody. Welcome to this Nonfarm Payrolls live coverage with Dale Pinkert, Valeria, Bednarik, and Yohay, Elam. We are expecting for 205,000 new jobs added in March. And that's it. So, guys, how are you?
Hi all,
Good.
nice
Hi,
to be here.
everybody.
Hi, everyone. Good.
Yeah,
Doing
I know
okay.
that everybody. Yeah, Valeria, I know that you wrote yesterday an article on Northern Payrolls selling that who cares?
Yeah, who
Who
cares?
cares? Yeah,
Who
the
cares?
Les, yeah, the Leslie commented like the so-called, the most famous and the most volatile, even in the forex sphere. You are calling now hookers. Why?
Because, of course, it's still a quite relevant report, but I have said this plenty of times. Employment situation in the US has been good or even better than good for what, 2 years already, right? The Fed decisions rest into two legs. One is employment, the other is inflation, and employment has not been a problem for 2 years already, while inflation remains low. So as long as inflation remains depressed, the Fed won't act. The Fed won't trigger the rate hike. And well, you see what happens with the greenback when the Fed says there's no rate hike in sight, right? So the fact is that unless we have a very shockingly divergence with the outcome today, the headline will actually be enough to affect the market, to affect this dollar sell-off.
Okay, thank you, Valeria. And Joe, what we can expect for today's no payrolls?
Well, the focus is on the wages. Wages disappointed badly last time. They sort of overshadowed the excellent rise in jobs. They fell month over month 0.1. Now they're expected to rise month over month 0.2. If they rise year over year, they were at 2.2. If they rise 2.5 or higher, it'll allow the dollar to recover from the huge blow it received from Elam. If it falls even lower or remains at this mediocre 2.2, we could see perhaps an extension of that sell-off. What Valeria said regarding the payrolls, yeah, the headline figure matters a bit less. And in general, it seems that the Fed cares more about inflation and in general about stocks. So, yeah, so the jobs is sort of, that's in the bank already. That's okay.
That's right. So, just passing to you, Dale. What are you taking in the Northern Payroll? What the traders are looking for? I know, Angel, you have a nice community in the LAR. So, what are they? What are your people
Well,
waiting for?
we were surprised by dollar weakness because every time the euro pulled back, it was corrective action rather than impulsive. Impulsive moves are markets that get from A to B in a hurry, and corrective moves are grinding sideways, EKGs of someone in a coma. So I want to show my chart here just to give some people some perspective because
I don't
I've
see
had
your
this
chart.
back test line in the euro that
No.
worked from the 114 level here that we're going to approach just a shade over 115. So I think it's kind of late in this move, in this wave, to get bearish a dollar. So I really, for the first time, we're also getting a little bit of divergence in the euro. I'm not saying it topped here because the readings are still pretty strong, but there is some form here of a drive 1, a drive 2, a drive 3. But you know, everything we show on our charts prior to a number is meaningless for at least an hour, maybe a day. But I would just be careful about getting carried away here with the bearishness in the dollar. Down here, it was a different story, but up here, I'd be careful. I'm not ready to top pick it, but
Yeah.
I don't think you could be aggressively short the dollar here. And maybe the dollar does. Everyone's saying, who cares? The Fed's been losing a lot of credibility lately with, you know, first of all, what they did in December, and now she's talking like a dove that she'll never raise rates again. Even brought up QE, which is something we've talked about, right? And, you know, Art Cashin on CNBC said rates would go back to 0 before they went higher. So the way the trend is with the Fed, for them to lose more credibility after a the speech that she made, a strong number would make her even look sillier. So I wouldn't be surprised if we had a stronger number to make the most central banks don't have the same credibility they had a year ago, including the BOJ and including Draghi. You know, Draghi every time he's
the magician, yeah.
So we'll see.
Okay.
But there might be more downside in the dollar. I would just wait for some type of correction. You know, doesn't mean you'll have anything to do today, but you know, maybe we correct 50% of this advance from 1050, 1150, this range here. So maybe around 113, 112.50. I saw a chart today that was looking for 110.50, but I would take it a step at a time, and I'd be looking for pullbacks or maybe some counter trend trades along the dollar.
Okay.
That's my view.
Well, we have FXStreet expectations. Are like 205,000 new jobs in March, but Sinatra is commenting here that UBS is 230,000. JP Morgan is 225,000, and Goldman Sachs is 220, and Citi is 215,000. So our expectations are 205,000. What will be the impact of a better than expected figure in the Forex sphere, Valeria?
Val's saying that the wages are going to be the important number, the underneath numbers. So what are they looking for on wage growth? Not much, Val? Yohay?
No. We had a negative reading the previous month in February, and we're expecting for a 0.2 growth this March. So I believe it's quite poor. And I do also believe that it will be more relevant to have a strong increase in wage than a strong increase in the headline figure. I do agree with Yohay on that.
Yeah, but the headlines are always headlines, and the initial reaction will be more likely.
Last month, the headline passed without notice because of wage falling into negative territory.
Yeah, that's right. But you know, headlines are always headlines.
Yeah.
Okay, so let me check if you have questions here. No, we don't have questions here. So what we can, what are the most important pairs to watch right now, Valeria?
Well, for me, the first one, of course, is what everyone is watching, and that is the euro. I have bring up a weekly chart, as you can see in here, because the pair has been below 1460, 1470, that region, ever since early 2015, you know. We have that spike, Black Monday in China, remember? That passed through that level. But anyway, every approach to that level for the past year and a quarter has been setting opportunities for the market. So today, I do believe that we should suspect large stops above that level. And therefore, if we somehow break through it, the pair will probably pick up pace and run beyond 15. That's my take in the euro. That's what I'm looking for. Of course, if we have a really negative number, right? And if somehow the report surprises to the upside, and given the current price, I will be looking for 1375 as immediate support. 13, the level, the high of February's high, sorry. And if we take that down, I believe that the pair can correct lower towards 13, probably wait by profit taking ahead of the weekend. Speculators will like to secure the money, right? Get that this week, and if we don't break this level, the profit taking will probably even higher, and therefore send the pair down towards 1240 or so, but still don't believe that that will affect the negative trend in the greenback. The other pair, yeah.
Oh, go ahead, Val. I'm sorry.
No, it's okay. I said that the other pair I will be looking for will be the dollar Japanese yen, because I do believe that it's clearly bearish, and we are due to lower lows in here. I'm scared, sort of saying, that the Bank of Japan may start jawboning or acting or making the rounds if we approach to 110. But if we have a lousy report in the US today, that's the level we would probably get to.
What I found interesting, and I like the impressions from Yohay and Val and Mauricio, with all this dollar weakness we've had all week long, I thought it was pretty unusual action that gold did not respond to it, crude did not respond to it. I wonder what your thoughts are. Gold led it. Gold was going up, bull move in gold before we had this bear move in the dollar or recovery in the euro. Maybe gold's telling us something. Wondered what you thought, because if I thought gold would have soared with the 115 euro, and it's done nothing.
Yeah, to be honest, I also believe that the gold will be the first one to rally, given the super dovish tone we had from Elam, and it didn't. So I believe that the market is maybe looking for more closing here. It's a different case for oil. I do believe that the background scenario that pushed it towards 25 is still there. Market is scared of a worldwide glut and will continue to scare about it. U.S. stocks keep rising, so not thinking that gold is so correlated with dollar weakness, because it has its own weakness to care about, But you have a point indeed on gold. That it's not picking up pace despite the dollar's weakness.
Yeah, so it makes me think, what would happen if a bid came back into the dollar? I know that I've been talking about the COT report, Commitment of Traders report, for the last month or so. Commercials have been near record net shorts, and retail has been near record net long. So maybe we're going to go back to your blue-brown line in the weeks ahead.
Yeah, this is a simple moving average, the 100 simple moving average in the daily, 1157.
Okay, thank you, Val. Yohay, any thoughts on gold not being supported by the weak dollar?
Yeah, it's a bit of a mixed picture of gold. I mean, the dovishness should have pushed the price up. As we've seen early in the year, when everything was sort of doom and gloom, central banks were jumping to help, and gold prices rallied. But as you mentioned at the beginning of the show, central banks are not as powerful as they used to be. And also Elam was for me, a bit confusing. I mean, it's the second time in 2 weeks that she sort of sees the glass half empty in a bit of an exaggerated manner, to my opinion, contrasting a few of her colleagues. It seems like she wants to support the stock market or something like that. Anyway, it's a bit of a confusion. Maybe she knows something we don't. Maybe this jobs report is going to be terrible. I don't know. But I think also the price of gold reflects a bit of confusion. So anyway, 112.24 I would say is the immediate level of support.
Mm-hmm.
And 12.05. And yeah, it's sort of floating out there, listless.
Okay, thank you, guys.
Meanwhile, euro-dollar is rallying.
Yeah, euro-dollar is rally. Check that daily chart here. My expectation is going to 115,
Yeah.
114.90, 115, and then let's see what's going on. No? I was expecting that.
Through a lot of downtrends. Euro hasn't broken. Certain trend lines have been broken. I saw on Twitter that haven't been broken in years.
Yeah.
So.
I was expecting that 115 the last two weeks.
I think 123 is halfway back from the fall from 140 to 104, 105.
123.
Yeah.
Okay. Yeah, it should be the 2014 levels.
Yeah, pull your weekly up. The show. Okay, Val's got a line up. Yeah, 50%. A little Val's chart showed it.
Yeah,
Like 22.90 or something like that.
yeah, 22.30 for me, but well, yeah, so still.
Yeah.
We have a
I still think that it's quite hard for the euro to reach that level, but well, I can't see it clearly yet. But if we take out that high, then it will be closer to it. 17.15 seems a possible bullish target for me.
Eugene from the chat is asking us if we can expect a correction in the euro, British pound.
In the British.
Well,
Yeah,
my
and
bias is negative on the pound, and we're just under 80 cents, 80 over there. So it's quite interesting. It seems like a tough line of support, of resistance now, and we might get some wobbles around the NFP. I'm not sure to which direction. What are your thoughts?
and Todd is asking about the kiwi. If you have any take in the kiwi. Yeah, double tap there.
Let me go get a glass of milk.
That's supporting the kiwi, yeah. So, yeah, my range is 68.80 to 69.80, currently somewhere in the middle. Milk, we have a milk auction next week. I think that at these levels we'll begin hearing some job owning from the RBNZ. This is driven only on the weakness of the US dollar. So these are the levels I'm watching. We're getting close to the 70 line, which is also could ring some alarm bells in Wellington.
Okay, I'm really a bit of surprised that the euro is pushing through fresh year heights ahead of a payroll. You remember something like that, guys? No. Are you alive?
Usually, I mean, just before the NFP, we get these sort of sharper, choppier movements, but usually it's not breaking to new ground, so this is a bit surprising, yeah. High so far, 114.37. Around 5 minutes to go. A bit more.
Almost there.
Yeah.
Don't chase markets, my trading warrior brothers and sisters. If you find yourself going through your screen right now saying, I need to find a trade, you need to shut your platform down. Because you know what? Yeah, the good trades will slap you right in the face and you won't be able to avoid them. It'll be too compelling. So when you're going from pair to pair, going, I got to find a trade, wrong psychology.
Should be like with Chuck Norris. You don't search for the trade finds you, or something like that. Those.
And also take some pressure off yourself. Forget about FOMO, because you know what? Every day you're going to miss trades. So if you let it bother you, like guys, oh, I should have sold the euro because I was looking at a third drive and then it breaks 100 on the number. Oh, I missed it. Well, you know what? That happens every day. So the good news is there's always another trade. So take some of the pressure off yourself. You'll stay healthier that way.
Indeed.
You don't want to get rich and then have to give it to the doctors.
Yeah.
Well, you know, the market will be there tomorrow. Well, no, on Monday. Tomorrow, no, tomorrow will be closed. Okay, so we are 5 minutes to go.
Yeah.
If you have a question about preferred short on dollar strength, I would say the British pound. All this Brexit talk is negative for the pound. It seems sensitive. The big current account deficit yesterday was echoed, so that would be my favorite. But after the fact and after things calm down a bit, do you have any opinion about that?
I concur. You're always better off shorting the weakness than the strength, in my view.
Indeed.
Because even if you're early, it's more forgiving than if you're shorting the leader. So I'm pretty sure that Euro bears during this rally, you could call it a short squeeze if you want, but what a short squeeze. Squeezing their head so tight their eyeballs are popping out. You like that image?
Yeah, that's from a cartoon, or
yeah.
Okay. The euro keeps running. The yen, it's breaking below 112.
That's right. That's why I was asking. I was about asking you, Val, what is your take in that pair?
As I said a few minutes ago, I do believe that we have scope to go down to 110 if, of course, we had a bad payroll. And my biggest concern is that once the pair breaks below 111, the Bank of Japan will probably feel uncomfortable and start jawboning or doing something to try to prevent the yen from appreciating further. But indeed, at these levels, we have little in the way, right? If we break 111, we have 112, sorry, I do believe that we have a next support around 1130 or so. We have plenty of room there to go down, and then farther to 110.
USD CAD came off some major support. I was interested in a macro look from Val and Yohay on Canada. It's bounced once. Had a pretty good bounce yesterday. Wondering what your views are on the loonie.
Yeah, I was watching that in Canada you have GDP monthly reports,
Yeah.
not quarterly like in most other economies, and we had a strong reading, right, for the previous month, and even further, it has been GDP has been rising, I believe, for 4 months in a row, or 5. I'm not pretty sure. I don't remember right now, but that's the thing it had up, right? However, take a look at what happened today. Oil is back down, and it's even up yesterday gains. But overall, I do believe that the Canadian economy is showing signs of being much stronger than many others like Europe or US or even the UK, right? So I don't know. I do believe that the market is still trading sentiment in USD and oil and stocks, but still the economy is doing much better than others and will end up being positive for the CAD at some point.
So just to remember, or to retake that, what would be a bad Nonfarm Payrolls today? Val and Yohay.
the headline under 170, I would say, or
Yeah,
under
but I mean
150.
the wages too, on the whole
Wages,
picture.
2.2. No, I would say 2% or lower would be a real disaster. 2.2 would be sort of a normal disappointment, and 2.5 or higher would be good news. I'm talking about year-over-year wages.
And your take, Valeria?
I do agree with you. I do believe that anything below 200 will be negative in the headline, and rates are below expectations. Again, will be really bad. Anything above 2.5, as Joe had said, will be extremely positive, something like shocking, and that's the only thing that can benefit the greenback. At least in the not sure, not saying that the greenback is able to come back, guys. I believe that the effects of this payroll will be limited. Anyway, 1 minute to go, guys.
Nice. 30 seconds.
Yeah, we have the guys.
40 seconds. Tick tock, tick tock.
Look at Make eyes against the greenback.
10.
9.
Okay, it's coming out. It's coming out.
Like a kid when we have payrolls. Oops, oops.
215, 215,000 jobs gained. Wages are up 0.3 month over month.
Okay.
Good news.
Positive reading. Unemployment rate higher, 5.0%. The market is not
It's
much.
not so bad. So
Average hourly weekly hours. Average weekly earnings are lower.
So we're getting the reversal in euro off the third drive. See? Woulda, coulda, shoulda.
It's a good jobs report. Hourly, the work week is still at 34.4. That's perhaps a negative, but 0.3 on wages is good news. The job gains is good, and minor upwards revision for last time to 245,000. It's year-over-year wages 2.3, a little bit better than last time, better than expected, but not.
Nothing has been shocking. Positive, but not whoa. So what will happen now?
We're seeing a stronger dollar in the immediate reaction, but this rally does not have legs, that's for sure.
Well, I guess we could say it's not weak, right, with wages, and kind of flies in the face of the worries of what Janet Yellen talked about, don't you think?
I think that I was right with saying, who cares?
I mean, she was so dovish, I thought she was going to fly off the stage, so.
I think also hawks fly, but anyway.
They do, yeah. What we really need is not a hawk or a dove, but an eagle. So.
Yeah.
How about that?
Yeah, fly like an eagle.
Yeah, soar. Soar above the minutia.
Okay.
All right.
Now you see, Mauricio, what I said, who cares?
Yeah.
Yeah, I mean, I have a growing feeling that, Fed is just extremely sensitive to movements in stocks and looking a bit less at the real economy. Inflation, her talk about inflation, especially with the core PC price index, the Fed's favorite, inflation figure going at 1.7, core CPI 2.3, doesn't look like a total disaster. I don't know.
It's not. Q50. Slightly back.
I think you've seen at least a short-term bottom and the dollar short-term top in the euro.
Yeah.
That's what I thought could happen. So, here we
Yes.
are. That's why I say don't chase, don't get overly aggressive on a bearish position when everyone has turned bearish the dollar. So trade your charts.
Looks like second wave euro-dollar selling or dollar strength in general. I think it's across the board. Oil sliding. We mentioned gold. Gold is sliding. Found support over there with 12.24, more or less.
Pound seems to be the weakest right now.
The weakest link.
Yeah.
Andy's asking how far the euro dollar could go down.
Honestly, not much. I think we got 1360. It's the next support, and if we need to take that level out to go farther lower, but I don't know. I don't see it at 13, to be honest,
And
today.
which moving average is that? Huh?
20, simple moving average.
20.
Honestly, the market is not willing to buy the greenback back. Not, not like, okay, let's go buy the greenback. Now, that feeling it's not coming after this payroll report.
Yeah.
And Luca is asking how we think that Nonfarm Payroll will affect the stocks. You know, you are follower the S&P, Dale.
That's for yeah.
You know, it's interesting. The market liked the weaker dollar this week. And,
Yeah, you know, corporate profit will be benefit from the weaker dollar.
but up until a week or so ago, the dollar and the market were going up together. So the correlation shifted. So I really don't know what the market wants. It seems like it doesn't matter as much. Weak dollar, the market goes up. Strong dollar, the market was going up. So I don't know right now. I was surprised the market was as strong as it was with this dollar weakness. So, you know, a lot of the bears in the stock market, they're split. They think there's going to be a big break in stocks because of the U.S. going into recession and a cratering dollar. And then there are the deflationists who say that the market's going to go down because the euro is going under parity because all the dollar-denominated debt is going to strengthen the dollar as the globe deleverages. So I think you almost have to trade everything like its own. Like go to a zoo and every instrument's a different animal lately, and trade it that way.
Yeah.
Yeah, correlations are breaking down.
Yeah,
But
it's a
you
jungle.
got a point there. So, not much.
No, more data. Revisions are very minimal as well. 1,000 jobs worse than originally reported. Minor changes for January and February. The real unemployment rate U6 or underemployment is at 9.8, up from 9.7. Bit of a sour taste in the mouth. Not so good news. I like to look at the employment to population ratio. It's for me the widest measure. 59.9, it's a bit higher. And the higher participation rate, 63%. That can explain the rise in the unemployment rate. So it's not. I mean, I wouldn't get excited by the rise in the unemployment rate.
Other Japanese yen, pretty much in change, 10 pips away from previous levels. Quite bearish for me then.
And manufacturing jobs decline, while construction and retail trade was up. Were up. Whoop.
Doug doesn't like the drop in manufacturing jobs.
Okay.
You know, I was diagnosed by my psychiatrist as a dyslexic, agnostic, insomniac because I stay up all night wondering whether or not there's really a dog. Takes a little while. Dyslexic is a key part of that.
If the dollar Japanese yen breaks again, okay, there we go. Goodbye,
Yeah,
dollar.
it took some time. Yeah.
Goodbye. Ah, it's a euro. Use max leverage.
Yeah.
You know, I don't know about you guys. I've noticed almost anything you want to do on an NFP on Friday, you usually have a chance to do it early next week too.
There it goes. Triggering stops below
Yeah.
12. And
I think we
run.
talked about that last time as well. And it
Yeah.
remains true.
Okay, I'm back. I just control the dock.
Go, 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 go.
It's pretty ugly in the end. They want that triple bottom. I never believed if you pull up a daily on US dollar yen, I rarely see triple bottoms like that be a launch pad for any kind of major advance on the daily US dollar yen chart. So probably get a correction in the S&Ps back to 1970, but the daily yen chart, I have it here.
And that will only fuel the dollar Japanese yen decline.
Yeah.
Yeah.
Well, the Nikkei took it, but if you look at the daily, like I have it up right now, I rarely see triple bottoms like this work, especially look at the last candle here. It wasn't even a reversal candle. It just held, you know, picked off a few stops. That's pretty ugly. You know, you could actually pretend, cover up the title of the chart, and this is a classic. You could call it a bear flag, a rectangle, but really, classical technical analysis would say, here's your flagpole, and here's your flag, and should it break down under this 111, you could have a move like this from here.
Yeah.
That takes it to 100. So I know it sounds ridiculous, but that would be the measured move off a breakdown under 110.70, closing back under this triple bottom that I never believed was a, I don't know who this is. Okay. So you guys see that?
Yes.
Oil is sliding. Well, euro dollar so far, well balanced.
Well, I'm glad I didn't short it. When it's down 40, oh, I should have shorted it. Oh, I'm glad I did.
Only a pound is reluctant to go against the greenback, and the rest.
Have your comments in the chat about pound yen, the dragon, sliding under 160 at the moment. Yeah, the pound showing more weakness, and the yen not so much. Yen is showing strength. And euro pound, well, it took a peak above 80, but still battling this line. So the pound remains the weaker link. Sorry.
No, it's okay. I was thinking that.
That's a good call.
And that had 15 minutes from the report or so. So later we take the high or the lows of this 15 minutes candles, the a bit more directional strength across the board.
It's weak. So it responds to it doesn't respond to a weak dollar, but as I said earlier, what would happen to gold if the dollar caught a bid? I think we're seeing. It adds pressure. Just a quick coaching lesson. When you guys notice markets that aren't doing what they're supposed to do under favorable conditions, like commodities not rallying when the dollar is weakening, ask yourself what's going to happen if the favorable conditions dissipate. And normally, you know, it's giving you the trade. So pay attention to that stuff. They call me coach, you know.
So what is the
Because I'm too old to play, so I'm a coach.
So what is the strongest currency? Foreign currency right now and the weakest?
Seems to be the yen, strongest.
Yeah.
And the weakest pound, as we were saying. So pound yen, it's probably a one to trade now. If the pound loses 42.50 below, it will be poised to extend its decline sharply.
Yeah, looks if we get through 250, which I have a 200-day there, we could trade 40.50.
Yeah.
But this is a support level in the pound. You guys, Yohay, what's the talk there? You're in the UK. What are you thinking since the terrorist attack in Brussels? More support for an exit? Brexit?
Yeah. Well, I'm in Barcelona, and there are many British expats here that don't know what their status will be.
Oh, that's right. Yeah.
Yeah. But that's the talk. The Brussels bombings showed two things. I mean, for those supporting or still looking for a direction, they showed that first of all, Europeans are somewhat incompetent in dealing with terror. Not that Brits. I don't think that other countries would do it better, but anyway, that's arguable. And it showed that, I mean, for those looking to blame migrants for everything, to put the blame on the EU's immigration policy and that the UK would do it much better. Of course, it's not necessarily based on the facts, but it raises the sense. But there are also other factors supporting the Brexit. I mean, you have. I always thought that businesses were sort of had a consensus against the Brexit, preferred certainty, but quite a few businesses stepped up in the UK saying that actually we would be better off, and there's still a big group of undecided.
Why do they think they'd be better off? I'm curious.
Because the EU regulation is so much hated. There was the case then with the straight or curved bananas, for example, a long time ago, and that the Brits would do all kinds of regulation better than those Eurocrats, and they would be better off because they would continue trading with everybody anyway, and that wouldn't change too many things. And for those supporting more democracy, they blame the Eurozone as being undemocratic, and more control for the UK would mean more control for the people. I'm not sure that is also very true. Anyway, the debate is still raging. It's not a clear cut that Brits will vote against the Brexit, so we'll have nearly 3 more months of speculation, and in the meantime, it weighs on the pound. Yeah.
I wonder why, since it's not, you know, they never went all the way and let go of the pound to use euros. Yeah. Why are the financial markets so worried about it, since it's not like Germany leaving the euro or even Greece leaving the euro?
Money. Money.
Why are the markets so worried about that?
That's the only answer there. The business, money moves the world, and they can't afford the consequence, the financial consequence of a breakout. There's not going to be any Brexit, as if there was no Brexit.
Yeah, there's still higher chances of no Brexit, but speculation is a bit. I mean, the chances of Brexit, according to speculation are a bit higher. I would say there are two dangers. Well, the official danger for the economy is that the trade relations will worsen. It'll be, well, the UK will have to renegotiate things. It'll mean less trade. The bigger fear, which is less talked about, is that if the UK leaves the EU, this could be the beginning of the end of the EU. There's so many troubles in the EU that even though the UK is not part of the Eurozone, it's not like Spain leaving it. Yeah, they still need this togetherness. Yes.
Yeah.
Okay, got it. So Europe's already weak, and this would weaken Europe further.
Yeah, this could be not only a British story, not only a story about regulation or immigration, but also further disintegration with migrant crisis, Shenzhen, what happened with Greece, the budget deficit. We had 8 countries signing the letter that they want the rules to be changed regarding budget deficit calculations this week. Spain, Italy, and other countries showing signs of rebellion, if you wish. So
Italy has turned into a basket case that's now being talked about more than in the past, isn't it?
Italy has a high public debt, and also it lacks any kind of growth. And also there are movements to leave the euro. So, and there are banking problems as well. So
yeah.
Take a look at gold, guys. It's plummeted. Oil too. Dragging OC and CAD lower. And there goes the pound.
Okay, Dale, I know that you have the live analysis room in 10 minutes, so I want you to make a final statement on what's happening today.
Okay, great working with you, Yohay and Val and Maury, and as I said at the beginning of the broadcast, the dollar was stretched to the downside. It was due for something like this. There were technical reasons. So we'll see what this dollar rally turns into. We've almost reached objectives. I think really key on the yen, the US dollar yen breaks that triple bottom, risk off could finally take place in the US. Someone pointed out the DAX is 20% from its high, while we're almost at new highs here in the US in equities. So I think the correction in equities is underway. And gold, as I've been saying, I thought we might see 1140, maybe even 1100 down the road for a great entry in both physical and mining shares and everything. So be patient, and maybe this gold was a precursor to the dollar recovery. And that's about it.
Okay, thank you, Dale, for coming today. It's been a pleasure.
Guys.
See you in a while. See you in 10 minutes.
Bye-bye.
Good,
see you.
good hunting.
Same for you.
Yeah.
Okay, so what we have here, Valeria?
Well, the gold and oil are falling big, and that's driving the dollar higher across the board, particularly commodity currencies against commodity currencies. But the rest of the market, it seems to be still reluctant to buy the greenback, right? I do believe that it's more related to profit taking ahead of the weekend, and due to the strong rally we have this week, than pure dollar strength, what we are seeing right now against the European mayors or the dollar Japanese yen.
Yeah, also it's just breaking down.
Yeah, alongside with gold, and there goes the pound pressuring the low at 42.50 level. The euro is still doing not much, to be honest. I would like it to see below this 13.60 region to think it will can go farther lower. And the dollar Japanese yen is flat.
Yeah, it's flat now. It's back to previous levels. So, yeah, go ahead, Yohay.
Yeah, I'll just, well, don't have much to add. Good jobs report, good wages, good enough to, I mean, provide the excuse for the profit taking that Val mentioned, the necessary correction after the dollar collapsed after Yellen's extremely dovish speech early in the week that dominated the whole week. I think that moving on, we will not see huge movements. We will see probably currencies, the dollar settling a bit higher. That means, for example, euro dollar a bit lower, but nothing, no big breakouts on my radar, at least for the next hours. Yeah.
And so, what we can expect into the next week?
More dollar weakness. Yeah, we have. I was checking the calendar. We have a lot of manufacturing and services PMI reports, industrial and manufacturing production in UK. So I do believe that the world next week will be grow. You know, if we are scared about a global slowdown, as we have been, because we have data coming out from China and Japan too. We will probably be in a risk aversion environment, and the dollar Japanese yen will be the one gaining the most. But I don't see how the dollar can recover ground. You know, I still can't see it at current levels. I do agree 100% with what Yohay have just said. The report is an excuse to take profits, and that's it.
Yeah.
I'll mention that next week we also, on Tuesday we have the ISM non-manufacturing PMI. The services sector usually provides a hint for the NFP. This time it will stand on its own, give some forward-looking data, and then we'll have some backwards-looking data, the FOMC meeting minutes on Wednesday, which is, in theory, it's a stale document. It's 3 weeks old. In practice, they edit it until the very last minute. Last time it was a complete snoozer. I hope that this time it'll be more exciting.
We have Elam too speaking next week again.
Oh yeah! Oh, good news.
Yeah, fun. And I'm not sure, but there's a tentative Draghi speech
on Thursday. Yeah.
Yeah, the same day. It's tentative. I'm not pretty sure. I was checking the calendars quickly before we start. So I'm not sure what he's going to say or in which event he's going to speak. But having Draghi and Elam in the same day will be fun.
Yeah. He's speaking in Lisbon, and she will be speaking late at 9:30 p.m. GMT in New York. So
Yeah,
maybe at
right.
a thin liquidity. So yeah, should be interesting.
Yeah, we have them both, king and queen of a forex market.
Yeah.
Anyway, to look at stocks, guys, keep falling. That is helping the Shen advance, regardless of what we are seeing in other pairs. I don't see much scope for a dollar Japanese yen recovery if stocks keep plummeting. Anyway, Wall Street opens in 30 minutes, right? Are you alive?
Yeah, just give me a second.
Okay. 1, 2, 3.
Oh, so how far the euro dollar? I know this is the same question, but I got it in the chat. How far the euro dollar can go?
Sorry,
Right
just
now?
I'm not seeing much of a very intentions in here, but I believe that if we take that low, maybe 1360, it's the first support.
Yeah, unfortunately, my prediction is that it'll settle in range between 113.65 and 114.10.
Yeah.
Sorry, I cut you off.
Yeah, it's okay.
Okay, so guys, I just want to thank you for being with us. I think Yohay is with us, no? Okay. Okay. Sorry. Oops. Okay, guys, thank you for coming today. It has been a pleasure, and see you. And right now you can go through Dale. And okay, thank you very much for your attention and coming today. Just refresh your page, and you will go directly to Dale. Nonfarm Payrolls.
It's always a pleasure to be here with you guys.
Yeah, my pleasure as well.
Payrolls, despite they are a bit disappointing.
Yeah.
Market reaction. Okay. Anyway, they will return. They will come back. Okay. They will be back.
You know, the market will be tomorrow. Well, not tomorrow. On Monday, the market will be there.
Yeah.
Yeah, a full week next week.
Yeah. Okay, guys. Thank you and bye-bye.
Okay.
See you soon.
Thank you. Bye-bye.
Bye.
Bye.